Bitcoin just did what Bitcoin does best. It humbled everybody. Welcome back to the channel, Finance People. If you are just finding me, a hearty welcome from the JoshLM Finance crew. I'll be your guide today, so get out your pen and pad and let's break this down. 1 minute everybody's talking six-figure price targets, champagne wishes, caviar dreams, the whole deal. And then, the next, Bitcoin's trading under $70,000. It's even kind of flirting with 60, and it just wipes out months of gains in what feels like the blink of an eye. So if you've been feeling a little shocked, maybe confused, or let's be honest, maybe quietly relieved you weren't over-leveraged, you are definitely not alone. So let's just kind of set the scene here. After topping out above a staggering $126,000 back in late 2025, Bitcoin has now dropped to a point where it's been bouncing around between 60 and 65,000. I mean, this is a massive, massive move. Yeah, we're talking about a nearly 50% drop from the peak. And to be perfectly clear, this wasn't just some small dip or a healthy correction, as they say. This was a full-scale market reset. And let's talk about the psychology of this for a second, because that $70,000 level was absolutely crucial. For weeks, it was the floor, the key support level everyone was watching. But as soon as it broke, bam, it became the new ceiling. And that flip from support to resistance, well, it triggered that classic crypto chain reaction, panic selling, forced liquidations, and a huge wave of automated selling. So why did this happen? It wasn't just some random stroke of bad luck. Let's really dig into the anatomy of this crash, but with no hype, okay? Just the facts. In just one absolutely brutal week, Bitcoin fell over 30%. Ethereum, it dropped even more than that. And a lot of the altcoins, like Solana, they got completely hammered, hitting multi-year lows. The damage was it was everywhere. And behind these market moves, there's always a human cost. We're talking over $2 billion in leveraged positions were liquidated, just gone. That's an immense amount of financial pain, and it represents countless traders who got completely wiped out. So here's the crucial point. This was a perfect storm. It wasn't just one thing. It was three major forces all colliding at once. First, you had macro pressure. Tech stocks got weak, and Bitcoin, well, it started acting less like digital gold and a lot more like a high beta tech stock. Second, institutional demand cooled right off. Those spot ETFs that were buying everything in sight, they suddenly turned into net sellers. And third, the leverage in the system just finally snapped. There were way too many traders who were overexposed, and their liquidations just poured gasoline on the fire. Okay, so let's get into this, because amidst all of that chaos, my personal experience was, well, it was very different. I want to share how I navigated this, not with emotion, but with a pretty calm, disciplined, and automated approach. My approach is actually fundamentally simple. I trade spot Bitcoin, and I use automated bots to do it. That's pretty much the whole strategy. There's no emotion involved, no staring at charts all night long, and absolutely positively no leverage. It is the exact opposite of the approach that just got so many people into serious trouble. And you can just see the difference right here. On one side, you've got the high stress, the panic selling, the constant risk of liquidation that comes with emotional trading. And on the other side, you have a stress-free, disciplined approach that systematically buys on spot, which means there is zero liquidation risk. While the market was in a total freefall, I was actually sleeping pretty comfortably. So what was the result of all this? Well, during that absolute wipeout, my bot did exactly what it was programmed to do. It bought Bitcoin at the lower levels, and then it sold into the bounce. In under 18 hours, a single bot run returned about 0.6% ROI. So is it a flashy Lambo-generating number? No, of course not. But it's a positive return on spot with zero stress. I'll take that any day. And that's really the thing, isn't it? People tend to underestimate these, boring strategies, but they really prove their worth when volatility comes knocking. A sustainable, peaceful strategy is what keeps you in the game for the long haul. So this brings me to a really crucial point about risk. And this is truly the core of how to survive long-term in these markets. So I want you to listen closely to this part. Let's redefine risk management for a second. It is not about trying to eliminate volatility because you can't. It's about managing your own behavior and your own discipline within that volatility. And let me be perfectly clear, this is not financial advice. Bots don't eliminate risk. What they do is help you manage your behavior. So my entire philosophy really boils down to these three principles. Number 1, respect the risk that is inherent in the market. Number 2, automate your discipline so that your emotions can't take over. And number 3, think in probabilities, not in certainties. When you do this, volatility stops being a source of fear and it actually becomes an opportunity. All right, so what am I watching next? Because we've established, having a clear structure is always going to be reacting with emotion. So let's look at the key signals I'm monitoring right now. This is the big question on everyone's mind, right? Where do we go from here? Is this the bottom, or is there more pain to come? Okay, here are the 3 things that I think matter most right now. First, can Bitcoin reclaim that key $70,000 level? That would be a huge psychological and technical win. Second, do the ETF flows stabilize? We need to see that institutional selling pressure ease up. And finally, does macro liquidity improve? If we can hold the low 60s, we might be in for a long consolidation period. If not, well, lower levels are still on the table. So the key takeaway from all of this is pretty simple. Bitcoin didn't die. It just reminded everyone of a timeless lesson. Hype fades, but discipline survives. Patience still pays. And that's the framework I'm using for 2026. By the way, if this breakdown was valuable to you, hitting that like and subscribe button really helps us out. We're trying to get to 1,000 subscribers, and your support means a lot. Thanks. And on that note, if you're looking for an exchange, I'll leave my Bybit link down in the description. And if you're curious about how I actually structure my bot strategy, spot only, risk controlled, no nonsense, let me know in the comments. If there's enough interest, I'll break it down step by step in a future explainer. Thank you so much for watching. Please share it with someone you love, and I'll see you in our next video. Cheers!